So is now the best time to start shorting Tesla? What's going on, guys? It's Ricky with TechBud Solutions, and I had to share this with you because it's actually trending not just on Google, but on social media. So obviously with Elon being affiliated with Trump, it's created a lot of backlash, surprisingly, to the people that once loved Elon because he was creating a self-sustained non-combustion engine. I thought liberals loved Elon, right? I thought they loved EVs. I thought they loved the environment, but now they've completely turned against him, right? A lot of you guys are aware of this. There's a complete vendetta against Elon, one of the wealthiest people, if not the wealthiest person in the world. With that being said, there is a trend going on right now. I wanted to break it down for you guys and why I believe it is simply not worth the risk. This is 100% my opinion. You guys let me know down in the comments section what you think. So this group is called ElonMuskHate. But again, it goes beyond that, beyond Reddit. But a lot of you guys know what my opinion is on Reddit users. Nonetheless, they are reportedly trying to short Tesla stock TSLA, right? They are buying $100 puts for June 20th, 2025. You can actually see some of the smaller... let me go ahead and show you. For those that do not know what I mean, this is kind of the post of the Elon Musk hate. Ready to stick it to Elon and short Tesla? This is how you can make money from Tesla stock going down. Get a brokerage account, Robinhood, Webull, etc. Deposit as much as you can. This kind of almost sounds like crypto. And then go into Tesla, buy a put, and select January 20th, 2025, $100 strike. Then buy as many contracts as you can. They are $130 each. If Tesla goes to from 250 and now keeps going down, you are making loads of money straight from Elon's pocket where it hurts him most. First off, in my opinion, this is illegal, right? You should never be telling other individuals what they should be doing with their money. There's nothing wrong with sharing an idea, but to tell, this is like my biggest ick with crypto is that, like, why are people always trying to convince you to buy crypto? Why are you always trying to convince people to buy anything, right? You should not be afraid to share an opinion, share an idea, but you should never try to convince someone because, again, your risk tolerance is not someone else's. The way that you manage or mitigate risk is not how others, especially complete beginners, should or will most likely manage it. So everyone who can needs to short Tesla stock and tell their friends that trust this one post to get 250,000 likes, 10,000 for every dollar. Let's go. If Tesla goes below $114 per share, so for those that do not know, let me pull it up very quickly. Tesla's currently trading at around 249, almost 250, right? If we look at the 1 hour time frame, this is where it's trading at right now. 249, 250. Yes, it's recently pulled on back. We'll talk about that in just a little bit, but it's saying if it goes from the current price level all the way down to 114, Musk will get margin called. This will force him to liquidate his shares, which will send Tesla stock into a death spiral, which again, his whole empire will crumble. So they are assuming that they can get the stock price to drop an additional 50% from where we are right now, which it already has dropped more than 50% from the 488. And I'll explain that in just a little bit. Musk will do anything to prevent this, and Trump will too. So keep the pressure on. And then again, a bunch of different people are talking about kind of like highlighting. I wanted to come back to this in just a little bit. Tesla shorts have generated profits of $16 billion from the stock's recent plunge. So let me explain to you why I don't think it's the best time to short Tesla now. Now, a lot of you guys, especially if you're part of my LPP team, you have watched me recently short Tesla. But what's one thing that I always talk about when it comes down to shorting any risky stock that's extremely volatile, Tesla or MSTR, right? Is that I close out my short every single day, right? Because the volatility is so high, anything can be announced overnight. You can't control nor mitigate that risk. And because of that, these stocks have recently pulled back a substantial amount that they could begin to recover. I can't predict the future. I'm not going to pretend like I can. So my job is not to avoid risk. My job is to manage it, which is why it's so important that, again, I choose to close out my short, and I short with shares, not with options that don't expire. The part that's super risky about this is that they are telling you or encouraging you to short Tesla right now. Now, I wanted to give you two different scenarios, right? I've made numerous videos. As Tesla's stock price has gone from the 240 that it was at right after the Tesla Cyber Roundup event, It began to skyrocket right around November 5th. A lot of you guys know that November 5th is election day. Elon was affiliated with Trump. They assumed that to be, a positive catalyst due to his affiliation. They thought maybe that was going to be a clear route for Elon's hyper success and everything that he wanted to pursue. Now we've come to find out that he shouldn't be getting any special treatment just because he's affiliated with Trump. And if anything, it's been taking him away from Tesla. So if anything, this initial rally, if you guys look back to all of those videos, and I got a lot of hate on it on YouTube, you guys know that I'm never afraid to speak my mind because at the end of the day, it is just an opinion. But my thing is, I always like to talk about overbought and oversold levels. If I see something that is overvalued and there is no fundamental reason that can pretty much sustain or validate why it's at that price level, why should we be afraid to openly talk about it, right? So when Tesla began to skyrocket, let me show you. It didn't skyrocket 20%. It didn't skyrocket 50%. It skyrocketed over 100%. And it did this within less than 50 days. So think about that. It's not out of left field that, why is Ricky hating on Tesla? I'm a huge Elon fan. I think he's one of the greatest generations of our time. I think he's one of the greatest minds of our time. And he's, in my opinion, like a real life Iron Man, right? With that being said, just because I like the dude doesn't mean that I have to agree with him and everything that he does and all his actions. I am still my own individual with my own opinion. And when I see something that is not valid based off of what its value was down here, nothing changed fundamentally about the company. There was no new projections. Initially, everything that was shared about Tesla was shared right around late October during that Cyber Roundup event. They talked about the Optimus robot as they've done from many conferences before. They talked about the Tesla taxi cab. I thought it was very exciting. I live streamed that event and still Tesla went from 270 down to 240. Wall Street did not like it. The only time Wall Street liked it was when he was affiliated with Trump and Trump won. That caused the catalyst. We all know that, sure, that is a positive catalyst based off of momentum and hype, but it's short-lived. There's nothing fundamentally about the company that changed. So it is just being self-aware that, okay, this thing began to push up. When it, no one can predict how high Tesla was going to go because it was just, it was a parabolic push, right? It was, as long as momentum was good, as long as the hype was still present, it kept pushing. You can never predict the top on these, but we all know that eventually, just as quick as it rises, it will eventually correct itself. And boy, did it, right? So when it was at highs of $480 at those overbought levels, then it made more sense to potentially enter a short because there's huge pullback potential. That's the difference from shorting it then to shorting it now. And I plugged it in just for those that, kind of want to entertain. Do I think that shorting Tesla is a bad idea? No, I think that if you're experienced, you know how to manage and mitigate risk if direction changes against you, and you know how to manage that, then great, all power to you. You're not a beginner, right? But I don't think beginners should blindly be going into a short as it's already sold off 50%, trying to stick it to the big guy or the billionaire when the stock itself has a history of skyrocketing for no reason, just off of good press and good momentum, that it can just turn against you at any given time. Remember to trade based off of what makes sense, not just based off of your emotion. So I did 2 series of examples. When shorting Tesla, again, you could have never predicted the top at 488. But again, we could have waited for confirmation of this thing showing signs of lower highs, lower lows, direction ultimately changing. And let's say that you even got in at a short at 450. It made more sense shorting at Tesla at 450 based off of risk to reward ratios, an entry of 450, and then you exit at 250. Again, not at the lowest price point, but based off of current price levels, 250. And then you would cut losses if it were to make new highs. And let's say that would be $500 per share. So your risk to reward would be 4-1. That means that this stock was so overbought that even if the trade did go against you, your potential for profit because of how much it had of potential downside was 4 times greater than what your potential loss is. At that point, it's kind of like, hey, let's play rock, paper, scissors. And if you win, I give you $1. If I win $4. That's the idea behind that. The probability, the odds, the risk to rewards are in your favor. You're positioning yourself in a position where at least the risk is potentially worth the reward. Now, again, it's a little bit different. Again, I just want to humanize this so we can all kind of understand why it might not be this safe. It's not that you can't make money. Anyone can make money doing anything. That's not the point. The point is it worth the risk? At $250 per share, which is the current price level, let's say that it does continue to sell off. Again, and let's somewhat be realistic. Let's say that it goes to $200 per share. It's not far-fetched. It definitely can go there, probably, right? $200 per share. Well, what if you have to cut losses if this thing continues to go up as it turns against you? Where are you going to cut losses? Let's say $300 per share, right? $50 of potential profit, $50 of potential loss. That's a 1-to-1 risk to reward ratio. Again, it's like, let's play rock, paper, scissors. You win, I give you $1. I lose, or I win, I get $1. It's like, yeah, you can take that trade. But again, statistically speaking, if you don't have, a 50-50 success rate, the odds just simply aren't going to be very favorable for you. It's not like a crazy lucrative opportunity. You're simply just taking the trade just because you can, not because you should. And again, the whole point, in my opinion, when it comes down to trading is that the odds should be so ever in your favor that the risk is so minute that it simply doesn't even compare to your potential for profit, right? We always talk about making sure that you put yourself in a position to succeed, focusing on maybe 4-to-1 ratios, 5-to-1 ratios. Those don't present themselves very often, just like Tesla doesn't skyrocket like this very often and then correct itself. But that's why those catalyst-based opportunities are so lucrative, right? Just like when markets become very oversold, and they are also viewed as, again, lucrative opportunities because your potential for profit could be much greater than your potential for loss. It would statistically almost make more sense based, again, I'm not saying Tesla's going to recover. I'm just saying based off of the recovery potential and based off of where you can manage or mitigate risk, let's weigh out another option. Instead of talking about shorting, what if we were to go long? So we type it in here into the risk to reward ratio calculator. This is going to be one to go long. And let's say that, again, you go in right now at $450 per share. Let's say that Tesla begins to not $450, $250 per share. So at $250 per share, I actually just realized, what was this? Yeah, no. So this one's $250 per share. And let's say that your exit here is going to be $350 per share. So again, not at the highest price level, setting something to be a little bit more realistic, but if markets do begin to recover, then it would give the Tesla the condition, the environment to also begin to recover. Not that it has to, but that it can. And then you manage your risk at $200 per share. At least at that point, again, it offers a 2-to-1 ratio. Again, your probability or your potential to win is much greater for that reward than it is for the potential for you to lose. The risk of losing is always going to be present, right? Your job is not to avoid risk. Your job is simply to manage it. But statistically speaking, again, it's just putting yourself in a position where if you do win, the win is so much greater than the potential loss. And in my opinion, right now, especially as a swing trade, that is a very different story, right? We do not know if the sentiment for the overall market is going to get worse. As long as Trump doesn't continue to poke the bear with the tariff war, markets shouldn't technically get worse unless we hear more things from the Federal Reserve that can continue to instill more fear into the market. Right now, what we're really paying attention to is the overall market. And overall markets are beginning to consolidate. They're showing signs of a potential support. They're not recovering yet, but if they do begin to recover, then again, technically speaking, it should give Tesla the environment to also begin to recover as well. And this is where, again, if you get a lot of beginners that now just begin to short because of someone on Reddit or because of headlines like this, they're not thinking about, well, if someone made if a group of people generates $16 billion shorting the stock, now we can make more because everyone wants to stick it to Elon. It's like, well, there's a time and a place for everything. They made $16 billion on a stock that gapped up an incredible amount within a very short period of time. So again, the risk to reward was so much more in their favor versus now the potential for profit is significantly less than what it was then, right? So again, just something to take into consideration where I love having conversations like this because it really gets you to think of, hey, does this make sense? Do I want to jump into this potential hyper momentum? But I want to remind you, when you trade off of emotions, more often than not, it can often lead to an uncontrollable amount of loss because you're not entering based off of risk to reward or a trade plan. You're entering based off of hope and what you just feel like doing. And that is just never a healthy position to be in the stock market. So please, do yourself a favor and be careful who it is that you choose to, follow in these markets. If it doesn't actually make sense to you, then why do it? So I'm going to short. This was just a funny meme that I wanted to show you guys. I'm just going to short Tesla so Elon can suffer. That'll show him. At the end of the day, like, does shorting Tesla hurt Elon? Yeah, I'm sure to some degree they've voiced their opinions, not just shorting the stock, but attacking, Tesla owners like they have anything to do with what Elon is doing. At the end of the day, it's a publicly traded company. The CEO is the most popular and most open CEO that, in my opinion, there is in comparison to any other CEO out there. He is very opinionated. He is very controversial. Nonetheless, the people that partake in either buying those vehicles are not in direct support of him. They are simply buying a vehicle in which they value, right? And it's just crazy that we live in a world that if you're not with them, then you're against us, right? And it's just this whole politic thing all over again. So it's very sad to see, but just something that we need to be very cautious with, right? You shouldn't ever be afraid to take advantage of an opportunity, but simmer down, write it down on paper, and ask yourself, does this actually make sense? Am I putting myself in a position to succeed? And in my opinion, short term, no, I don't think so. I think that if we had this conversation 4 or 5 months ago, like we've made numerous videos about, when Tesla was incredibly overbought, then yes, at least at that point, although again, it was bullish, at least at that point, the risk to reward was so much greater and so much more in your favor. Right now, again, we don't know where the market's headed. The market's beginning to show signs of a support. And if things do begin to get better for the overall market, it will simply give Tesla the environment to also do better as well, which means that you're going to get margin called or lose whatever money you put in a put option for your Tesla short. So just something to be cautious of. Again, if you want to short Tesla, do it because it makes sense to you. Don't do it just simply to please others, right? Stay calculated, stay effective. And if you ever have any questions, feel free to comment down below. I hope to see you for our live trading session tomorrow. And if you want to tune on in, it's that second link in the description down below. Shoot, I might even short Tesla, but guess what? I would never carry that position overnight because it's simply not worth the risk. Appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.